Hello, and welcome to the Semiconductor Industry Association's public webinar series, where we address current issues impacting the global semiconductor industry and market. My name is Falan Yunug. I am the Director of Industry Statistics and Economic Policy at SIA, and I will be your host and moderator for today's webinar. Since 2014, when the Chinese government launched a major initiative to boost its domestic IC industry, Chinese semiconductor companies have been working very hard to build manufacturing capacity, accelerate technology innovation, and expand product lines to accomplish Beijing's goal of producing 70% of domestic chip demand by 2025. While China's semiconductor industry continues to report stable growth, this growth has been uneven and inconsistent across subsectors. Here to discuss China's present and future semiconductor self-sufficiency prospects are four distinguished panelists. Mr. Randy Abrams is Managing Director, Head of Taiwan Research and Asia Semiconductors at Credit Suisse, where he covers the Asia semiconductor sector with a focus on Asian foundries, back-end test and packaging, and the IC design sector. Dr. Handel Jones is the founder, owner, and CEO of International Business Strategies, Incorporated. He has over 35 years of experience in the semiconductor industry and is the author of several books, including China America, The Uneasy Partnership That Will Change the World, China's Globalization, How China Becomes Number One, and Artificial Intelligence, How AI and IA Reshape the Future. Mr. Chris Thomas is a leading China and tech industry scholar. He is a member of the board of directors of Velodyne LiDAR, a visiting professor at Tsinghua University, a non-resident senior fellow at the Brookings Institution, and a member of the US-China Track 2 Dialogue on the Digital Economy. Finally, Mr. Jimmy Goodrich is Vice President for Global Policy at SIA. He leads SIA's global policy team and works to advance SIA's international and trade policy agenda. Jimmy has led and conducted significant research and analysis into China's technology and innovation capabilities. Randy Abrams, let's start with you. You've been following the China semiconductor market and industry for some time now. Give us your big picture perspective on how China's market has developed over the past 5 years and China's domestic industry's efforts to supply that market.
Okay, no, great. Thank you, Falan. Thanks for hosting us. I think the best way, we have a few slides that we can go through. If you can pull up and share the screen. Okay, thank you. Yeah, so if we flip to the next page, which goes through on China's industry, just a few of the topics we'll discuss. But we would point out that China is building up a tech supply chain. Semiconductors within that have actually lagged, had relatively mixed success. The China market, a big part of consumption, but it's really only about 25% of end demand at this stage. But what's happening, we're seeing policy support come through from the National IC Fund, grants, tax breaks, and now the SciTech Board provides cheap access to capital. We'd say the traction has been relatively mixed to date. They've been gaining some share in IC categories and in back-end, but has been more mixed in foundries and lag in some of the key areas like equipment. But we would say the domestic investment is poised to continue in spite of some of the US resistance we've seen. And the high valuations on that SciTech Board are providing a cheap source of funding. So I'll flip through a few slides quick to show some of these market trends. If we flip to page 3, so this shows just tech supply chain. China is building up pieces across the chain, but I would say has been much further ahead in the hardware side, which is over on the right. The PC brand, smartphone, network infrastructure, a lot of companies chasing the opportunity if you look at fabless IC design. And foundry, despite all the traction, about 10% market share. But this is the area that China is focused on. You could say to advance the economy is critical for national security and also to move to the next stage of development. So a lot of focus has shifted to semiconductors. We can turn to the next slide. So this gives a profile just where is China and why this market matters. From a demand perspective, first domestic China on the left. For a lot of the tech markets, smartphone, TV, PCs, about 25% of global demand. But then if you take 5G smartphone this year, 60% of smartphones from China. And then on the right side, it discusses the China vendors. So as a market downstream, And China built smartphones, 60% of the industry units, but also in categories like wireless infrastructure, TV, PC, about 30 to 40% share. We can flip to the next slide. Now, in semiconductors, and again, this is where it's lagging hardware a bit. Now, the SIA data at the top shows China's semiconductor consumption, a big market, 150 billion. But the lower slide shows the gap, which has been persistent for China. In terms of production share, running really only about 20 billion when we take the actual manufacturing of chips. And that's where a lot of the chips have had to be imported from Taiwan foundries or for memory and processors. So we can turn to the next slide. Now, where the policy support to try to close that gap, I'd say a lot of data on here, but I would say broadly, tax breaks, waiving import tariffs, National IC Fund, where we're now on the second fund, 29 billion. And now I'd highlight the SciTech board, like China's NASDAQ, has been a source of funding. I'll show later the valuations that these companies are getting. So we can turn to slide 7. And it's showing the case, the largest foundry in China, the government grants for R&D for a lot of their projects as they push advanced nodes. That's gone up 7 times over the last 7-8 years. So you are seeing the support come through to really develop the manufacturing. We can turn to slide 8. Now, this shows a profile just how has China done in terms of semiconductor growth. This is the listed companies. We even strip out for organic and inorganic. And until 2018, China was maintaining about 20% growth. Actually has decelerated a bit the last 2 years. 2019, you could attribute part of that to the trade war, a little part of that to some of the US resistance. But I would say coming out of COVID, the last couple quarters, we are seeing it pick up. We are seeing efforts for China to bring up local suppliers for import substitution. We can turn to the next slide. So, and this would be a longer term record for how China has done. I put the 3 major categories I look at. So foundry market, China's maintained about 8–9% share, has actually lagged quite a bit. A big piece of that has been TSMC's success, staying about 5 years ahead of the China foundries, has about 55% market share, and even leads among the China customers. Where it's had more traction, the bright red line, IC design, market share has moved up to 25%. But I would point out a big part of that success was Huawei's internal chip division. If we were to strip that out, market share for the China fabless would be more like 15%, not close to 25%. We can turn to the next slide. Now, what's driving and where you could say the next wave could be, again, very high valuations, especially on the China markets right now for semiconductors. A lot trying to get behind this industry. I put in red, the upper left shows the China foundries versus their global peers. The way to look at this, the ROE for these companies below 5%, but the valuation, they have similar price to book valuation to their overseas peers, where ROE is 10% up to 30%. Back end the same way, they're actually trading at a premium, 3 to 5 times price to book, despite ROEs below 10%. The Taiwan peer is trading around 1 times book with ROE 15 to 20%. That shows up also the fabless. You compare the China fabless companies, a lot of them 10 to 20 billion market cap now, trading at 60 to 90 times earnings. Compared to the Taiwan companies, aside from MediaTek, most of them only a few billion market cap, trading at about, still decent, but only about 20 times. That is giving the China companies access to capital to fund their growth or fund M&A. We can turn to next slide. And it's showing up, I'd say, for this localization drive. I mentioned China re-accelerating a bit the last year. The CapEx investment coming through. If we look at the 2 leading China foundries, this year for their expansion, they've been running 180% CapEx to sales. So really pushing the investment to try to accelerate their growth. So just 1 or 2 more, and then we'll hand it to Handel to go through his remarks. So on slide 12, this goes into China projects, where you could say a lot of projects still in planning across foundry and memory. Now, if we sum up planned projects, about 900,000 capacity. To put in context, TSMC is about 1 million. So if all of these were to get built, you're almost the equivalent of TSMC, which has over 50% foundry market share. Fortunately for the industry, they're coming through very measured. There's even been some funding concerns that we can talk about in Q&A, but it's keeping it a much more gradual pace for investment. But the plans are there, and a lot of these companies have aspirations to expand if they have the capital and they have the business. So we can turn to the next slide. So if I kind of wrap up again, I'd say key picture then. So a lot of investment coming through, policy support is there, but still you could say varying traction. And I think it does get back to, you need the time, the know-how. There's been some restrictions in terms of M&A, which has held up the development. And you could say the global companies have done things to maintain their leadership as well, which has limited and created, you could say, mixed success, but has been coming through. But with that, I'll turn it back to Fallon and we can go through the other speakers.
Perfect. Appreciate that, Randy. Next, let's go ahead and turn to Handel Jones. Handel, much of your research has focused on China's efforts to increase its technology competitiveness. What's your assessment of how China is doing in terms of semiconductors and other technologies?
Thank you. So we have a lot of data in terms of where China is at today, where China has been in the past. But what we really do is we're trying to focus on where is China going and what kind of problems do they have and what kind of success do we think they're going to have. So let's go to the next slide. So this is a little bit of a background. So let's go to the next slide. So we focus on where China is investing, and also in many cases, what does that mean? So one area we focus on heavily, of course, is the 5G infrastructure. You know, China was behind in 2G, 3G, 4G. Now they're moving ahead in 5G. So our assessment is that China, from a technology point of view, is probably about 2 years ahead of the rest of the world in terms of 5G. And of course, by the end of this year, we should have over 600,000 base stations installed. And the plan by 2024 is 6 million base stations. So why is 5G so important? Well, 5G is the platform that allows you to support things like telemedicine, autonomous transportation, logistics, a whole range of capabilities that also have the underlying capability of artificial intelligence. So having high bandwidth connectivity is a critical capability for productivity in many industries. Let's go to the next slide, please. So if you look at the smartphone business, China again has come a long way. If you look at the Mate 40 family, and especially the 40 Pro Plus that has just come out, it is significantly, in our opinion, better than anything else in the market. So China has 1.6 billion mobile subscribers. So they're building the infrastructure to support 5G, and also now the smartphones for 5G. So within the smartphones, you obviously have a whole range of capabilities, such as picture taking, but a key capability that is emerging that's going to change many of the industries is artificial intelligence. And that comes in terms of 3D facial recognition, depth of measurement supports going to support augmented reality, virtual reality. So again, they're building not only the infrastructure, but the platforms. Let's go to the next slide. So this is what we show in terms of the smartphone volumes. It's a little bit difficult to see. We do take into account the fact that maybe Huawei will not have any smartphones. The Honor brand is being sold. Mate is right now being kept. But if you look at the competitiveness of the Chinese smartphone vendors, you do have Apple, you do have Samsung. But again, compared to the rest of the world, they made incredible progress over the last few years. The caveat, though, is they need 5 nanometers. They need TSMC. They might not need the IC design capabilities. Obviously, Qualcomm can be key. But again, if you look at the rate of change, it's dramatic. And of course, if you look at the services that are being offered in terms of the phones in China, significantly ahead of what we have in the US in terms of the financial transactions, the monitoring of locations of people, which you might consider to be good or bad. But again, the features they're putting in and the software support they're putting in is now becoming significantly ahead of what we have within the mainstream capabilities in the US. And again, as I said, China is moving very rapidly in terms of adopting many of those capabilities. Next slide, please. So another area we monitor very carefully, or we track very carefully, is digital health. If you look at what China has done in terms of COVID-19, Taiwan has also been very impressive. South Korea has been impressive, but they've controlled it. In the US, basically right now, we have probably 170,000 new cases a day. California has just gone into a purple zone capability again. But what does what they've done mean? Well, what it means is they're going to bring in digital health capabilities in terms of monitoring a whole range of symptoms, including measurements for diabetes, blood sugar measurements, and so on, that potentially can be significantly better than what we have. So again, we're going from a state where the health system was very weak to potentially being leadership on a global basis. Now they need sensors, they need a whole range of capabilities to do that. What China is doing, in addition to developing the products and developing the infrastructure, they're developing the demand ecosystem. So digital health will not only include the wearables, also include telemedicine in terms of the high resolution imaging, remote diagnostic centers. So this is a 5 or a 10-year time frame, but it's going to move quite rapidly. And of course, what you need is significant consumption of semiconductors and access to semiconductors. So in our opinion, in 2030, 2040, digital health will be probably the largest industry in the world. Let's go to the next slide, please. The other area is robots. Basically, robots, of course, we view today as being primarily in manufacturing, but we do see right now significant changes in the automation in factories in China, including blockchain. So can you make a smartphone in India? Yes, you can, but it's going to require a lot of automation and so on. Can you make them in the US? Yes, you can. But the infrastructure is set up in China. The supply chains are set up in China. So basically, we do see manufacturing continuing to have high level of importance in China. And of course, manufacturing gives you the ability to export. It helps you with balance of trade. But robots are going to be used in home care for the aged, basically in terms of the service industries. Autonomous cars are robots on wheels. Drones are robots. So again, basically logistics capabilities will be supported, factory automation. So big investments in building robots, but also investments in the markets or the applications that use the robots. And of course, what you're going to need again is semiconductors. Let's go to the next slide. So autonomous transportation, we do now see basically Tesla is probably the leader in terms of software, but we do see level 3 coming in China. I think in the next 4 or 5 years, you'll see level 4, level 5 coming in. And again, this ties in not only to the movement of people, but also the movement of goods. So again, autonomous transportation is just not just cars, it basically means trains, high-speed trains. And again, we're talking about potential, I think you can go from Pudong to Nanjing now in 1 hour, 600 kilometers an hour. So again, this is an area we do see rapid development of capabilities. And again, semiconductors are the building blocks, but again, you need the applications and you need the user base to utilize the capabilities. And that's why we see China, through its planning activities and investments, moving very rapidly. Let's go to the next slide, please. So smart cities, this is an area which is going to take a lot longer. But again, this is a 2030, 2040 capability. You need a lot of sensors. You also need to monitor people, which is going to bad. And 3D facial recognition, of course, is part of that. So the whole range of things now coming in terms of making the movement of people, the tracking of people, the monitoring of people, and obviously that includes health. It also includes a whole range of other things in terms of the capabilities of industries also. Let's go to the next slide. So where does China continue to lag? So one area we track quite closely is equipment for manufacturing. So we look at applied materials, land research, and so on. And yeah, there are some activities in China, but when you look at the complexity of 5 nanometers, 3 nanometers, 2 nanometers, not even close. So having equipment for 28 nanometers, frankly, is not a big deal. That technology is important, but it's really what happens at 5 nanometers. So we're also showing wafer capacity at less than 5 nanometers, you need EUV. So US government has blocked UV scanners. SMIC is starting at 7. They're doing some cryptocurrency chips right now at 8, but really they're struggling with 14. The other area is EDA tools. The complexity of EDA tools is very high. And again, if you have EDA tools for 28 nanometers, it doesn't buy you much. And again, what you need is basically the ability to support advanced technologies. DRAM, this is maybe controversial, but if you want to do 1Z, 1 alpha, you need EUV. And again, no UV. So yes, if you have 24 nanometer DRAM, it can support the consumer segment, but it doesn't help in terms of data centers. It doesn't help in terms of the smartphones. Also, the NAND, YMTC could be the exception. The difficulty in making these products in high volume and having high endurance is very complex. So yeah, we do see some lagging. Let's go to the next slide. But again, we think that you still will have significant growth. So in terms of, we have actually a couple of other slides which maybe not being shown. One is showing what the supply in China is versus the consumption. The other figure we have shows back in 2008, of all, back in 2008, about 8 or 11% of semiconductors sold into the China market or consumed in China were consumed by local. In 2020, 50% of the semiconductors that are consumed in China, this 180 billion, whatever it is, it dropped from 200 billion, 50% is now consumed internally. And in 2030, about 70% will be consumed internally. Now in 2030, though, we show basically the China may be producing maybe 35 to 40% of the total, nothing like was being claimed by organizations in China. But again, what that means is consumption is growing rapidly. So from there, for China, having an open market for supply is very important. Let's go to the conclusion slide, please. Yeah, so why is China focusing on technology, and then why basically, why do we see a rapid progress? Well, obviously, large markets in China, so they want Chinese companies to support those markets because they produce very high levels of employment. Effectiveness in exporting. Basically, the export market, balance of payments is critical. There's also high level of entrepreneurship in China. We hear a lot about SOEs getting too much money and so on. Well, the entrepreneurship in China is incredible. And then we think the funding by government and other sources is very good for industries that need long-term investments. Now, foundry, as Randy mentioned, has not been successful. But again, I think the commitment by the government to build the industries, to build employment is critical. The other area is determination to be successful. The US trade issues have actually made China a lot more determined to be successful. We now see a high level of energy to be independent of the US and to show the US they can be competitive. So even though we talk a lot about the industries and so on, the underlying capability that will make or differentiate China or differentiate the US in the next 5-10 years is artificial intelligence. So we see artificial intelligence in many industries. Obviously, digital currency is very high profile, logistics, et cetera, et cetera. Let's go to the next slide. And basically, the smartphone, of course, is part of the AI ecosystem. And now we see the neural network processor capabilities coming in. If you look at the latest M1 chip of Apple, by the way, it has an incredible neural processor in there. That's where key parts of the industry is going. And then China is basically moving fairly rapidly in that arena, still behind the US, but the rate of progress is very rapid. So semiconductors are a foundation for building industries. Manufacturing is a key part of that. But if you can't be successful in manufacturing, though, and you can get supply, and that is actually a key statement, if you can get supply, focusing on the applications and building the applications base, actually can give you significantly higher value. Because in many systems, semiconductors represent maybe 20% of the value of the end system. So that's my presentation. And again, I'd like to thank you for having me here. I'd like to turn over the next speaker.
Perfect. Thank you, Handel. Appreciate your opening comments. Chris Thomas, let's turn to you. You're located on the ground in China and know many of the industry players well. Would love if you could give us a sense of how leaders of the China domestic industry view their self-sufficiency efforts.
Yeah. So I really appreciate the two previous presentations, and there are a lot of advantages that players in the Chinese semiconductor market enjoy. Right? They have close proximity to end customers. They have a lot of government support. There's a lot of local engineering talent. There's a lot of entrepreneurship, and there's this great Chinese business ability to deliver value for money and find the sweet spot in the market to offer something low cost, high quality, high performance that others don't do. There's a lot of excitement around semiconductors here, but I think there's a few sort of reality checks that we need to put on it that the ecosystem and the industry here will need to work through. First of all, this will take a long time. And frankly, this is the first time in the industry, especially if you look upstream at manufacturing and other things, where people are trying to move from the trailing edge to catch up to the leading edge, rather than starting at the leading edge and then over time building out a lagging edge portfolio. It will just be interesting to see if it will be able to be done, but it will definitely take quite a bit of time. I think the other thing to think about localization when you frankly look upstream, when you think about putting together a manufacturing process, is that localization is not a one-for-one substitution of an imported to a local product. A manufacturing process has 300 to 400 steps, about 400 to 500 inputs, all of which are intricately linked together in a very complex value chain, all of them interacting in amazing trillions of combinatorial ways. So if you change a tool, you then have to change a chemical, which means you then have to change some other process step, which impacts all of the other process steps, all of the other chemicals, all of the other tools. And so every single individual decision inside a fab to localize has massive downstream and upstream impacts on the rest of the decisions you make around your product and supply chain. So it all has to move in lockstep, and it has to move in a very complicated and distinct fashion. Whereas in some areas, Chinese companies are getting close to being competitive, and in other areas, they're maybe a decade away. How do you move all of this in lockstep? So when you actually talk to people who buy stuff in China, so these are system companies, these are fab owners, these are tool vendors, the number one key success factors, the key buying factors, why they buy, still is traditional performance, price, technology, quality, reliability. Sort of the nationality of the supplier is still low on the list. So nationality is something that's important. It's important for business continuity. It's important for risk reduction, but this is still very much a commercial market. So that means if you're going to win in this marketplace, either as a global player or as a local company trying to break into this market, you've still got to win on the traditional factors, not just be the Chinese champion to win business. And I think the other big thing beyond the complexity around how do you drive localization and self-sufficiency is that the economics, when you're talking specifically about manufacturing of semiconductors, when you think about actually the semiconductor value chain, the economics of self-sufficiency and localization, to use economic parlance, kind of suck. At the end of the day, let's say you're selling into the system vendors and you're focusing on winning the China market. That's only going to be 20 to 25% of the global market. And all those big system vendors, they sell over half of their volume overseas. So they're not going to want to localize their entire supply chain in China. They're risk reducing by trying to move some of their supply chain outside of China. That's why Xiaomi, Vivo, Oppo are all building capacity in India. So that's just selling chips. And so you're going after a relatively small market if you're focusing just on the localization self-sufficiency market. If you go upstream into the fab, it's even more difficult because you're talking about 4 to 5% of global installed capacity. No one's ever developed a successful chemical business or tool business or materials business focused on such a tiny sliver of the market. And because the pricing in China tends to be the China price, not the global price, that means the percentage of the profit pool is actually less than the percentage of the revenue pool. So the economics of self-sufficiency are very difficult. And of course, the government has recognized this, and they've stepped in two ways, which is massive amounts of government support and stoking a stock market bubble. And there's a For those of you who did not live through 98, 99, 2000 in the US, I lived through it. Actually, I came out of business school right after the bubble. So my Intel stock options, I think when I joined were at 80. And then when the day I actually started working, it was like 15. We're in that same sort of stage inside China right now in terms of the valuation of semiconductor assets. It's truly mind-blowing. And of course, this is driving a lot of interest, a lot of entrepreneurs behind this. But of course, government subsidies and stock market returns drive lots of capacity, maybe excess capacity, and they fragment the talent across many different efforts in the marketplace. So if you sit there as a semiconductor CEO, what are you thinking about? Well, most Chinese semiconductor CEOs face the same challenges that everyone else in the semiconductor industry faces. This is a business. So they care about execution. They care about designing products, selling products, managing teams. And yes, localization and buying from local suppliers is important, but in some ways it's kind of down low on the list unless there's an immediate and difficult danger from a US export control or something like that. So they face all the typical challenges of execution. There's also some unique ones that they face in the China market, right? One is the uncertainty of politics and export controls. That's overhanging everyone about who will be next on the entity list, who will be next on the blacklist. That's driving a lot of decision making. But the biggest issue you always face running a China engineering team is always about talent, talent, talent. Retaining talent is probably the hardest thing to do in China. And of course, the environment that you're in right now, where if you're just a small engineering team and you have a good idea, you can get $200, $300 million of venture capital very easily, makes it difficult to retain that talent. And so you see many instances of successful companies having one or two products, then all the engineering teams move on to do something else. The other big challenge as a semiconductor CEO is stakeholder management. And I think that's sort of three different directions on that one. The involvement of the government is both a blessing and a curse. It brings you support, it brings you funding, it brings you money. But the government is very complex. It has a lot of demands, and it's not just one agency, right? There's city, provincial, central, many different stakeholders that you have to balance in that. Many CEOs talk about that's basically a full-time job, government stakeholder management in China. Also, at the same time, if you're a Chinese company in the space, you have a very difficult job managing local partners and global partners at the same time. You need your global partners to keep doing business, but at the same time, you're moving over and beginning to move over a lot of your business over to local partners as well, which creates a lot of tension within that ecosystem and is a very difficult thing. So as a Chinese CEO, you sort of have to play the China game and the global game at the same time. That's a pretty difficult thing to do. So it's a very stressful job that these guys face on the ground right now. So a lot of excitement. There's a lot of great technology being created. There's a lot of teams being created. There's a lot of IPOs happening, but also a lot of challenges in terms of actually making this happen on the ground.
Perfect. Thank you, Chris. Jimmy Goodrich, let me turn to you. You've been closely following the Chinese government's efforts on promoting its IC industry since it's launched at the current initiative in 2014. We wonder if you could give us a sense of Chinese government's views on its progress to date since 2014, and what are the next steps maybe?
Well, thanks, Falon, and I'll be brief because I think really want to get to the Q&A. I've got a lot of I know questions that we want to ask of each other and the audience. I think it's really important as we think about if you've been reading all the recent writing in the Western media and the Chinese media about how China is prioritizing semiconductors in the 14th five-year plan. They're looking to strive for self-sufficiency. If you look back in the course of China's industrial economic history, this is not new. In fact, the integrated circuit has been in every single five-year plan since the 1970s. And we're now really kind of moving into the fifth phase, I like to think of China's semiconductor policy framework. Phase one was actually in the late 1970s and early 1980s, where you had even a state council integrated circuits commission chaired by the vice premier. Sounds familiar to what China has set up today. But they had small institutes with really government-led research. They really went nowhere in terms of commercial success. Then when China started integrating the global economy in the 8th and 9th five-year plan, again, semiconductors were a focus area in that plan. China sort of toyed with working with foreign companies, but still largely state-owned. They had two state-owned companies, Huajing and Wuxi for the 908 program, and then Huahong and Shanghai for the 909 program, imported Canadian and Japanese equipment, but by the time they set up their fabs, too late, too little, far behind. Then sort of the third phase, which is the 10th and 11th five-year plan in the early 2000s, I kind of think of that as the forgotten decade of Chinese industrial policy for semiconductors. China joined the WTO, and that's when China went from 2 to 25% of global semiconductor demand. So the story was really around integration of the global economy, all of the flat panel, smartphone, other electronics OEMs growing rapidly. As a result, you saw investment by the global supply chain into China, particularly into back-end assembly test for IDM capacity. SMIC was created in the early 2000s. You saw some experimentation with tax credits for fabless firms. That led to another bubble at the time. Chris might remember of fabless companies registering in Shanghai and other areas, but that quickly petered out as the government funding really dried up, surprisingly, for new entrants into the chip sector throughout the 2000s. You still saw sort of a humming along of China's mega projects, 863 program by China Academy of Sciences. But more or less, it's a forgotten decade of China's domestic chip development. That all really changed in the 12th and 13th five-year plan, roughly in 2014, when China announced a new initiative, the Integrated Circuits Industry Promotion Guidelines, which were published by the State Council. They set up the first phase of the $21 billion National Chip Fund. And this is the first time the government really committed major and massive amounts of capital to the chip sector. And this is, again, different from all its previous efforts where the funding was targeted and only at a few companies. Now we're in sort of this broad-based, all aspect of the value chain. But still, over the last 5 years, it's been concentrated. In fact, 70% of the National IC Fund's investments have been into manufacturing and to foundry and memory primarily, and some trailing edge analog technology. But geopolitical events over the last 5 years have certainly, I think, influenced the next phase, the fifth phase of China's industrial policy. And so we're moving from a sort of concerted but centralized focus on a few small number of companies by the National IC Fund into what we're now seeing is sort of a plan for all-out localization. The 14th five-year plan, which has been previewed, has stressed complete self-reliance, redundant supply chains, building in more global supply chains in China to make the world more reliant on China's supply chains, not less. And what we're starting to see, as Chris and Randy and Handel have mentioned previously, is China trying to move upstream into the supply chain and equipment, materials, EDA. And I think that's going to present challenges, even though China has announced a second phase for its next 5 years of a $31 billion national chip fund. You now have the STAR market, which Chris has mentioned has led to crazy valuations. The interesting thing, though, is if you look at some of the major placements on the STAR market, 70 to 80% of the capital of the investors are government investors. So one big question mark is who's really creating the bubble? Are they private day traders, or is it the state who's trying to put more capital into its chip sector? And I think I would argue if you look at most of the listings on the STAR board, they've been primarily backed by government investors. So you still see the state dominating from an investment perspective, whether it's valuations, whether it's startups, whether it's investments. And again, I think the challenges that China's had in the past have been about every 10 years, you've seen a new radical change in policy. And that's created issues for anyone in the Chinese chip sector, is you have to sort of realign your business to prioritize this new policy. State ownership is still dominant across the entire supply chain, except in design. China's most successful design and also OSAT companies primarily are market driven and private owned, although that's also changing with the National IC Fund taking stakes. And the more state ownership you have, you've kind of seen a reverse trend of less success. So as China moves to this all-out localization phase over the next 5 years, targeting every aspect of the supply chain, from photoresist, which just yesterday China dumped $2.2 billion into for localization of photoresist, to materials and equipment in EDA, can China actually keep a focus on all of these hundreds of different parts of the supply chain? or are they going to disperse their efforts, see disaggregation of talent and funding? And so you get a lot of mediocre technology at the end of the day. That's the big question mark. Is we've never had a country attempt this type of localization before. The plan for the 14th five-year plan clearly outlines they're going to attempt to do it. So the next 5 years is really going to be a big test case. Can this be done in a sector, as Chris and others in Handel have pointed out, never been done, and some question whether it can be done. So I think that's how we should think, sort of phases of policy development. We're just moving into this new phase with a lot of unanswered questions. Thanks, Falon.
Thanks, Jimmy. Now let's open it up to Q&A. I encourage the audience to submit a question. If you have one, just hit your Q&A button and we'll get it, and hopefully we can address it. I thought I'd just go ahead and just kick things off. Loop back to you, Randy, and maybe ask a question that delves a little bit deeper into sort of an assessment of how the various parts of the Chinese domestic semiconductor industry have progressed over the past 5 years: design, foundry, IDM, OSAT. Jimmy mentioned there's a lot of investment on the part of the government in the manufacturing side. Has that paid dividends, or are they doing particularly well in other areas as well? Maybe you could sort of delve a little deeper into that for us.
Okay, yeah, thanks, Fun. There's a few slides we have just to go into a little bit of depth. It'll put some numbers behind this. Maybe if you pull back up to page 15. So I put two tiers on here. Foundry, so let's take a look at the different categories. Foundry share, really quite stagnant, 9%. Now that has grown because the overall foundry sector has grown about 10%, but broadly, there's still a huge piece they can't access. And you can think of their lead foundry, SMIC, just getting to 14 nanometer now for the very small start. But that still means a lot of the smartphone processors, graphics, FPGA, data center, it still really can't access those opportunities. And now, more recently, you could say some of the restrictions limiting EUV tool, and more recently, if it stays in place, some of the restrictions on SMIC and advanced tools could put a bit of cap on advanced capacity. Now, it points to the lower slide. That's the fabless companies. I would say there's been a better channel for fabless to access advanced foundry. They can use design service companies and go through TSMC. So two tiers to that. But China fabless, if you look at that bucket, it has grown from about 8% market share to close to 25. Now, a key piece, you could say the biggest success factor has been Huawei, which if you strip that out, a bit more moderate at 15%. But I'll go to the next page because fabless, it really cuts into a lot of different chip categories. Where the success China has had, I would say they tend to do a lot better in some of the high volume applications with a little bit lower entry barrier. Some of that has been traction, you could say, led by Huawei, but mobile processors, but also things like CMOS sensor. And you could say from M&A bringing in OmniVision, which now has Will Semi, more of a China company. There's been a big push, first with crypto, but now some of the ASICs and AI chips, and then some of the wired market. I'd say more recently, we're seeing at the low end of the market, low end microcontroller and analog. But then if you look at the other IC categories, there's a lot of effort on the right. So far, market share quite low on, if we take memory, processors, graphics, and analog. We can turn to the next page. So just back in, and I think when we were talking earlier, the OSAT sector, it does get back to downstream move first. So you did have more capacity put in place for the back end. But there was M&A. Really before M&A became more difficult, JCET acquired Stats Chip Pack. Tongfu acquired AMD's assets on the back end. That did allow them to jumpstart, now has about high teens market share. So more competitive on the back end space. And then the last piece I'll address just on the next page, the equipment and materials. And if we look at the equipment market share, it really still is the traditional equipment vendors with high barriers, running huge scale fabs with a lot of learning on the advanced nodes, makes it a high barrier space for a new entrant to come into. And if you look at a few of the companies that are listed, growing from a low base, but still market share a bit below 1%. I'd say China, kind of back to investing in the photoresist, wafer has been a big area for investment. But so far, in speaking to the China foundries we cover, still largely using it for test wafers, even on 8-inch, not yet into volume production on the wafers. So what you see on the right, it's really the Japan, like Shin-Etsu, Sumco, Siltronic in Europe, plus Global Wafers in Taiwan with most of the market share. So you could say for China, I'd say back end, some areas of fabless, but for other areas like equipment, materials, advanced foundry, still a pretty wide gap.
Perfect. Thanks. Thanks, Randy. Anyone else want to take a stab at this question? Any other industry, parts of the industry that are experiencing significant progress, or where there may be a lack of progress going on?
Well, I think that it's you see something that's very typical in China, which is there are certain types of industries and businesses that are more conducive to the China level model. So you see actually a lot of success at the consumer side. Obviously, many of the consumer system companies are in China. They're very focused on cost and performance, and the tolerance for lower quality, lower performance products is higher. And so you do see a lot of substitution, let's say, Wi-Fi chips, connectors, drivers, things like that in the consumer space, the TV space, and other. Obviously, you see this beginning to happen in the phone space. Clearly, most of the content in the phone is still from international vendors. But if you start looking at, it's now happening in sort of discretes and passives, and then it's going to start to move to active chips, and then maybe smart antennas, and then sort of move up the line there. And then clearly there's been a few successes around CMOS image sensors and other things. And of course, design, I think design is frankly the most successful part of the entire, no matter how you look at it. And that's simply put because frankly, because of the foundry model, the barriers to entry design are very low. And it really, design is very much more so around being a system on a chip company, putting together blocks developed by other people and getting them out the door quickly around a consumer application, rather than the creation of core IP. And there's a lot of great design teams in China building market-specific solutions around that. You see more challenges, sort of anything outside of digital, you just see more and more challenges, even though there is a pretty consistent effort around things like gallium nitride, silicon carbide, new materials, but it's been a slow uptake. And you see sort of anything that's at the very bleeding edge from a manufacturing perspective, as we've said many times, is an area where the market still has gaps.
Hold on, I just wanted to add one point there. I think moving forward, I think another area of interest is going to be in flash memory. I think as a couple of the panelists have pointed out, that's one area where the model might fit for China to be more successful. And some of the companies that are ramping up flash in China are hitting a lot of their technology milestones. So I think that's one area to watch. And then in addition to that, I think, again, that the government's going to be a key factor, but, the areas where the government invests significant volumes, you just have not seen yet some of the output that they would desire, with the exception maybe of flash memory.
I'd like to offer a slightly different perspective on some of the issues. I think you also have to look at the R&D activities going on in China. If you look at 5G, obviously we're in production, but now China is making significant investments in 6G. And this is a 10-year investment. And that involves now a whole range of new materials. So we do see significant investments in 3-5 compounds. And we do see if you look at quantum communications, potentially significant lead. So what we do see is this investment, a long-term investment, which in many cases is supported by the government, but then you have the entrepreneurs taking over. And I slightly disagree with the characterization of the star market, because we have worked with a number of companies that have had successful IPOs. And the valuations are crazy. I mean, completely crazy. But we worked with some of these companies for many years. Yes, they've been given some government subsidies, but the CEOs are very entrepreneurial. and their customers are in China, and they also develop close relationship with some of the customers. So I think we have the underlying foundation or support being provided by the government, which actually gives fairly high levels of security in the fact that you'll be around for a long time. So even though you might miss your goals, you'll have funding support to take another shot. So I think in terms of the stock market, obviously the investors are getting a payback, but also entrepreneurs are making good money, and so the engineers. And that's creating now an environment similar to Silicon Valley, where yes, you're going to have a lot of failures, but you will have success. But again, if you look at areas like, as I said, 6G, this is a 2030 effort which is being worked on right now. And it's being worked on in both the private and the public. But by getting the government support, that gives you high levels of security. So if you're working with a VC, then basically you also have security, but basically they tend to be shorter term. So I think we have to look at R&D and where China is going. And yes, they failed in a number of areas like foundry, completely agree with that. And will they catch up? No, TSMC is superb. TSMC basically, we know what they're doing in 2 nanometers right now. But I think we have to look at where some of these investments are going. The other part also look as education. Big emphasis now on coding. 6-year-olds are being trained in computer programming. And again, I think another key part of that also is going to be artificial intelligence, where you do need semiconductors, but again, the vertical segments, the usage of semiconductors is also key. And that's where the government is providing support in creating markets. So I think we've had some very good inputs, but I do disagree with some of the inputs. That's life, right?
Yeah. I want to pick up on one thing you said, Handel, and throw it out to the group. Chris, you had mentioned the talent challenge in China, and wanted to see, obviously the money challenge has been overcome by what the government has offered over the past 5+ years. But really, the talent is a challenge. And one question we got that I want to throw out is, what's the long-term strategy for China in developing its local IC talent, recognizing that this could really be sort of the hurdle that it needs to overcome?
I think I just, Falon, jump in there for really quickly. One interesting thing to note is that just last week, China set up a semiconductor university in Eastern China. They've actually now, the Ministry of Education approved integrated circuits and electronic engineering as a top level degree, which means universities are going to be incentivized to set up programs in that regard. But irregardless, China has a shortage of talent. I think one of China's own MIT white papers has noted that they have about a 200,000 to 300,000 projected gap in supply versus demand by 2030 of their IC workforce. And to really put a point to that, I've visited about 15, 20 of the new fabs that are being built across China the last couple of years. And what really stood out is that when you meet the fab manager, they're usually Chinese or Chinese American or Taiwanese American. The technology director running the fab operations might be from Japan or South Korea. And then you have line managers that sometimes in the hundreds are actually still living in Taiwan or South Korea, but commuting to China from Monday through Friday. And that's because they just don't yet have the expertise built up to run the number of fabs they have in a sort of a high quality way. That's certainly going to change over the next 5 years as you get tens of thousands of people into the workforce. That's going to solve itself. But right now, it's a short-term real pinch on their supply.
Mm-hmm. Anyone else want to comment on the talent issue?
Well, they do have 7 to 8 million graduates a year. And I think the high school classes now are science, history, and Mandarin. So science is basically understanding technology. History is to have a global perspective. Mandarin is really language, but also memory. So they're focusing now very heavily on the fact that they're going to train people or train students in the sciences. And I agree, there is a shortage. And I think they're getting super help from Taiwan and some other areas. But I think, again, they're planning for the future. And are we doing it? So the difference that I see right now between China and the US is they have a number of plans. They will fail in many of those plans. And you see too many companies in many areas, but the ones that survive can be fairly strong. So yeah, they're planning long-term in terms of education. They're planning in terms of, I think, the university issues. So they do have plans, and that's where I think we have a big difference in terms of the US and China.
Right.
I hope the US changes.
Right. I think you had mentioned that in an article you wrote recently in the Asia Times about what the U.S. needs to do to, quote, go faster than its opponents. And there seems to be some views on how it can improve on that area. We're getting down to about 5 minutes left in the webinar. I do want to throw out a question probably to you, Jimmy, to look at initially. A number of folks have asked this, and it's regarding the presidential transition in the United States and how that may change policy going forward vis-a-vis China for the U.S.
Well, you threw me the hardest question possible, Falon, so appreciate that. Really, it's hard to look in with the crystal ball. I think things are still formulating. We have to look at who's going to be in the president-elect's team, the cabinet. All these things really matter. Personnel is policy. But certainly there is a hope that will at least move from sometimes unpredictable, unplanned, chaotic policy making to a more predictable environment. That does not mean that some of the restrictions will be lowered or the tensions will de-escalate. But there is some hope for some more stability, at least from a predictability perspective, which makes it easier to plan business. But I'd love to hear from Chris or Randy or Handel how you think China's going to react. Do you think China's going to change its strategy domestically with the change in a U.S. administration, or are they set on their path?
So I have a view on this. And again, I think we always oversimplify by saying there's a China. China has many, many, many different groups. Do I think China at a governmental level is set on technology independence and driving the technology industry? Of course. Is that going to be their own decision, probably made independent of the moves of the United States? Yes. However, I do think that as Handel said, I don't think all the heads of these semiconductor companies are government drones. They have to balance. And the most successful companies have always been ones that are both global and local at the same time. Doing in China for China does not work. It is not a strategy. So only global companies survive, including in China. So if there is a way for that group of CEOs, that group of leaders has been turning away from the US because they fear the access to technology that they'll be cut out of the market. That is still maybe a winnable set of stakeholders for the American technology industry, for the American technology policy. So I think that group is up for grabs. And if you make the right steps, you can bring that group closer back to the United States. Of course, at the same time, they have to balance their relationships with the government, what the government wants, but at least you give them an alternative, give them a balance.
Randy, did you want to chime in?
Yeah, no, I will. I think it's what I would say on the ground, like a lot of the companies, there's a lot of fear on restrictions, maybe overblown, but I think they saw ZT, they saw Huawei, they saw SMIC. And so there's fear from a number of others. That's driving some of the localization now, even absent any government policy. But it's a fear that at some point, whether all equipment will get restricted or access to technology, access to overseas supply, like a Qualcomm baseband. So from that perspective, one is companies are carrying more inventory. That's happening across the chain. And they're also trying to have some kind of domestic. It gets back to self-sufficiency, even at a company level. That I feel like we are seeing that. I don't think electoral change, Biden coming in, brings that away. It might ease it a little bit if all of a sudden we see those actions like Huawei or SMIC get reversed. But as long as some of the companies and some access to technology restricted, I think the activity for some attempt to have local domestic source. I think the other approach we're seeing, SOEs, they're getting the encouragement to, if something is viable and good, they will substitute out like an overseas CPU, GPU for a local solution. So that is the other activity we're seeing.
We have about a minute left. Handel, do you want to provide any
Sure.
thoughts on this question? And that may be the last thoughts
Sure.
with the webinar.
So we think so far China is taking a fairly defensive approach to the US pressures. We think in Q1 of next year, they will take a more offensive approach, because some of the activity is basically like blocking chips to Huawei for 5G infrastructure. I don't think that's going to be accepted. So I think next year, Xi Jinping has to show he's strong. Biden has to show he is strong. So I think in Q1, I think we're going to have some increased conflict, and then hopefully with rational solutions emerging later. But I think it's going to get worse before it gets better.
All right. Well, Handel, I think you've had the last word there. Randy Abrams, Handel Jones, Chris Thomas, and Jimmy Goodrich, I want to thank you all for participating in today's webinar. And I want to thank all the audience for joining. There were a lot of questions, and I'm sorry we weren't able to get to them all, but we appreciate your enthusiasm and look forward to continuing the conversation during another webinar. Thank you very much.
Thank you.
Thank you very much.
Thanks. Thank you.